record on this. And now I'm gonna make Arthur host. Make host. Host. Okay, cool. Okay. Just make sure I'm gonna put this on the other groups. Nah, I'm gonna put it in tomorrow. All right, guys. So welcome everybody. If it is this first meeting you are watching here on Quantico Cap, good luck. I hope you can understand my English. So yeah, that's gonna be your challenge. Trading is easy. Understand me is the real challenge here, right? And today we're gonna talk a little bit the improvements that we are doing on aggressive, moderate, and extreme. As you guys saw, this past few days, extreme was really, really good. You guys saw that extreme going really, really good. Most of you guys didn't trade extreme because we were trading aggressive because aggressive is more solid, blah, 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 all those things that you guys know. Especially because aggressive, extreme before the special filter that we did, it was like a crazy giving 40 signals a day. So it is impossible to follow something that's going to give you 40 signals a day, right? So that's why we were not following extreme. But we were not following, but we let the extreme roll. So we were able to start back testing with some numbers and find the right spot on extreme. And then this week we put it to work, and then it was great. It was actually, I am surprised with the results that we are getting on extreme, and I bet you guys are also surprised, and I bet you guys are also just like me, regretting not taking the extreme today, right? I did not trade today. I was waiting for extra confirmations, and I did nothing. You guys will see my screen here. I did nothing. The good thing is I'm not losing money, right? That's the good side of not trading. Well, but let me tell you what's going to happen start Monday. And that's very, very important for everybody to understand. That's why I'm recording this meeting. I was not going to record, but the reason that we are recording is because I want to talk to you about aggressive, moderate, and extreme starting next week, starting Monday. And why we are changing? We are changing because we are improving. We are here to make money. You guys should be very worried if I give you a platform that's going to be the same forever. Like, we are changing because we can see that we can do always better. The thing is, our team, we are getting a lot of data from the markets, a lot of data from Polygon, a lot of data from Cboe, a lot of data from the futures. We are getting data from everywhere, a lot of data from our own indicators, our proprietary indicators, data that we don't have on the market. Like, nobody has this kind of data that we do, right? And we are start learning a lot with this data we are collecting, and then we are improving our indicators. Does it make sense for you guys? So, for example, just a quick example. Let me share my screen. Share screen with you guys. And I'm gonna share this one. Okay. Now here, let me bring this. Let me bring this here. Oh, it was in another place. Okay, let me put there. Okay, now you guys can see. Reload. Right. This data you just can't find in anywhere, right? Because it doesn't exist. This is a very, very special proprietary indicator that only Quantico Cap has. And you guys will have access to this indicator very, very soon. That's the history of puts and calls, right? So right now we have 55% puts, and as we can see on Quantico Cap, this is what we see, what's happening right now. But we don't have the history, right? And pretty much this guy here only Quantico Cap has, but now we develop the history, and we are developing the real history so we can see past few days how it was, right? And then we can compare and we can learn a lot with those datas here, because then we can see, okay, on that scenario with that trade with that entry, how was the puts and calls and what was the right number and blah blah blah. So we are learning not just with this but with a lot of data that we are having here, right? And then with this data we are being able to improve our indicators, improve our filters and everything. And the result is pretty much what you saw today, this week. The result is pretty much what you saw this week with the extreme, all right? So far, so good. Makes sense to you guys? Okay, so let me explain to you. Extreme, sharing screen again. It's gonna be better if you guys see that. Wait. There you go. Share. Okay. Now, extreme, how this is going to work? And listen, we are not trading SPX anymore, right? So make sure that you understand that we are not trading SPX anymore. Can you trade? Yes, you can. But keep in mind that everything that we are working for NDX. Because again, with the whole data that we collected, with all the information that we have, we understood that the same trades on the same moment, on the same scenario, SPX would, NEDX would be way more profitable. So there is no reason for us to trade SPX, right? So you can trade SPX on the same triggers if you want it, but you will have to take care of the exit yourself. And since the market doesn't move the same, is going to be very, very different. So in my case, I'm keeping SPX here just because for me it's important to see the levels. It's important to see where is the POC, the minimal ATM, the hedge wall, because listen and understand, it's better to trade Nasdaq. It's better to trade Nasdaq. You make more money trading Nasdaq. But SPX respect the levels much more. All right. So SPX respect the levels, but it's better to trade in Nasdaq. Sometimes it's going to be very different, like it was this morning. This morning it was crazy. ES was going up, and then the index was not moving. So it is what it is, right? Now, how extreme is going to work? So I'm going to have one NEDX extreme and another NEDX aggressive here. Extreme is going to work with the momentum indicator, which again, momentum indicator is a proprietary indicator you're never going to find anywhere. We have the zero line, and when we cross the zero line, we're going to have the signals, right? But if we cross up, we're going to have a buy. If we cross down, we're going to have a sell. To avoid this kind of bullish moments like this, boom, 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 here, there would be, I don't know, probably 10 signals right here and right here. To avoid those chopped moments, we are filtering the signal with the puts and calls. So this indicator is really, really good, but sometimes it gets a little bit chopped here. So to avoid these chopped days or chopped moments, we are filtering the momentum with puts and calls, all right? So you're only going to have a signal when you have the momentum crossing and the puts and calls are favorable to the signal. Now, the cool thing about the extreme is that we're going to give you guys every signals that we can. Even, wait, where is it? Even if I have to give you, there you go, more than one signal at the same time, just like that. So we had 1, 2, 3, 4. We got like 4 positions here, and we close all the positions here. And why is that? Because we have one crossing up, favorable on calls with good calls, and then it came back down, and then I had another crossing, calls still favorable, another crossing and another crossing. So every time that we're gonna have a cross here, because the cross is the trigger, and we have the calls or the puts on the same way and in a good number, that would be, that's why we developed this guy right here, outside of the chopped zone, right? So for example, triple Q on this day, it was, I guess, that was Wednesday, I guess. That was Wednesday. Triple Q, listen to this and pay attention. Listen to this. Wednesday, triple Q stayed the whole day inside the chopped zone, right? But take a look on SPX, what happened on SPX. All the day outside the chopped zone with calls killing, right? And then we go and take a look on Wednesday. And this is what happened at Wednesday. That was the Wednesday. Boom, 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 boom. Market going up all the way. Market going up all the way. All the sell signals was bad. Almost every single sell signal was bad, but the market was going up all day, right? And then you have right here this information. SPX is above the chopped zone with marketing going up. And then here is what we're gonna do. Every time that we have a crossing on the zero line and the puts and calls are favorable to the momentum, we're gonna take a signal. Now, listen, the stop here is gonna be 20 points. Okay, every time you take a signal here, you know that stop would be 20 points. Your risk is 20 points, which is like is not big. It's not a big stop on Nasdaq, but when we did a lot of back tests, 20 points was the best one, right? So your stop here will be 20 points. Your trading stop will be also 20 points. When we move 20 points on our favor, we're gonna bring the trading stop 10 points behind the price. So that's why it's calling momentum. We're gonna trade the momentum. If we lose the momentum, it's gonna stop on the trading stop. All right. So extreme, you might have multiple signals on the same time. You might be trading 4 signals on the same time, like just like we did here. 1, 2, 3, 4. We were trading 4. We got a buy signal here. It came against us, but it didn't stop it because it wasn't 20 points. We have another buy signal, and then a little bit hit, then a good buy signal, and then here, because of the trading stop, we closed it every single buy signal. It was 4 beautiful trades and made a lot of money on this one. So this is going to be extreme, right? The rules are, if we cross the zero line, puts and calls gives us the condition, we're gonna take it. And we might be taking more than one signal at the time. And then the stop will be 20 points, and the trading stop is also 20 points. Once we move 20 points on our favor, it's going to bring the 20 stop 10 points behind the price. That's it. Got it? That's going to be extreme. All right? All right. Now, before we continue, any questions about the extreme, how this is going to work? Any questions? Or we're good to go? You guys understood? Pretty simple. If you have a question, that's the time. 3, 2, 1, boom. Okay, no questions. All right. Now, aggressive. Let me explain what we are doing on aggressive. It's very important for you guys to understand it, because aggressive, I have back tests to show you what's going to happen and what you can expect from the from aggressive on Monday. All right. Now, aggressive, I know that most of you guys are following the aggressive. And I was following the aggressive as well. And I will keep going following the aggressive, right? Aggressive is the one that I'm going to follow. Now, with all this data, with everything that we are putting together, with all the experience that we are already acquired, and all the changes that we are doing, we create a very, very good signal for the aggressive. But we are filtering this signal a lot, because it's a good signal, but you have a few stops on this one, right? So we are filtering the aggressive a lot. But what we understood is that it's not working. Like we are holding a lot the signal, trying to filter the signal, right? And today was an example. So the filter that we create to not lose money on aggressive, actually today blocked us to trade. So we were not able to trade aggressive because the signal is super good, but the filters that we created for the signal is holding us back, and we are not being able to trade as much as we should be trading the aggressive, right? So I decided to remove the filters. Starting Monday, every time that we have a trigger to trade the aggressive, we're going to see the signal, right? And you're not going to have filters. The good thing is you will be making money, and I want to show you on the back test how this is going to work, right? The bad thing is you will take some stops. Now, the most important thing is it doesn't matter if we put filters or if we try to avoid bad signals, it doesn't matter. You always gonna have some stops. And what we understood here is okay, so we're gonna go for with everything that we have. If we take some stops, it's okay. We're gonna take some stops, but the cool thing is we're gonna make a lot of money on the good trades, right? Think about it. The extreme, it doesn't have any extra filter. It is what it is. And takes the trade, it doesn't think. It only takes the trade. And it was great this week. The aggressive, it is a trigger. We have the indicator. We have a special technology to give this trigger, but we are trying to avoid the stops. And with that, we are not trading. You guys understand what I'm saying? We are trying to avoid the stops. And with that, we are not being able to trade as much as we should be trading on aggressive. But the thing is, we are being very careful in changing those signals because it's money. We don't want to lose money. We don't want you guys to lose money. So everything that we have to do, we're going to back test and we're going to make sure that's working. All right. So start Monday, we're going to release the beast. Aggressive will be there working all the time. You're going to have a lot of signals and you're going to have some stops. The stop is going to be 20 points. I'm going to show you the back test for the past 2,000 trades on aggressive. Because if I show you a back test with 10 trades, 100 trades, like is not much. But if I show you a back test with 2,000 trades, then we have something, all right? And then I can also show you a back test with 14,000 trades. So you guys understand that there is something here. We are on something really, really good here. But in order to do that, I really need you guys to understand that you will have to take some stops. Can you guys understand that? Like there is a risk to trade. If we are trying to avoid the risk at all costs here, we are doing our best to avoid the risks. Guess what? We are not trading as much as we could. So we already have the signal, we already have the indicator, we already tried everything. We're gonna just put the thing there. It's gonna be working. You guys will have amazing, amazing opportunities, but you will also have stops. Please understand the stop as cost of doing business. All right. And by the way, I told you guys that my cost of doing business is $200 a day. You guys remember that? 100 points. So I set it the back test with my cost of doing business. So the back test now is going to show you results in a way that you never gonna have a day where you're gonna lose more than $200 trading with one micro. All right. So far, so good. I'm telling you that we are going to release the aggressive that we are trading right now. We are filtering a lot because we are trying to avoid all the risk. It's not working. So we're going to release aggressive like it should be with no extra filters. You guys understand that you're going to have amazing trades, but also bad trades. It's part of the business. But even though in the end of the day, you're going to make money. All right? Or in the end of the month or in the end of the week. Okay, guys, so far so good. So I'm going to show you the aggressive, the back test on the aggressive, and you're going to understand what I'm saying here about the whole back test thing and about the taking risks and blah, blah, blah. There you go. Boom, you can see my screen here, right? Right. Somebody say something. Okay. All right, cool. Now, this is the aggressive. Okay, this is the aggressive, and this is the back test of aggressive. So we put the code on TradingView just to run the back test, right? And what we have here, please take a look on this, is we have 20 points stop loss, 80 tickets, because each point is 4 tickets. And by the way, this is NQ. It is futures. There is no difference. It is what it is, right? Like we have no slippage, no extra, anything. it's working like it should be working. You can count with this back test like it is the real deal. It is the real thing, because sometimes we do the back test on NDX, but we trade futures and we have some differences. But now we are doing the back test on futures, so we know it is the real deal. Okay. Now we have 20 points stop loss, right? Here, 20 points stop loss. We have the trading stop working like this. It moves 20 points, is going to bring 10 points closer to the price. Okay. All right. Remember that each points 4 tickets. We're going to be trading from 9:35 to at most like 3:45. Okay. And the worst day, we're going to lose $2,000 on one mini, since we are trading with micro is $200, right? So we are using micro for the mini for this back test. If you are trading one micro, you have to do 10 times less. In my case, I'm trading with one micro, but I'm trading 20 accounts. So we're going to be making twice this money, this whole money here, right? And the maximum profit in a day is going to be $3,000. That's the configuration. 20 points stop. Trading stop starts with 20 points, brings the price, the stop 10 points close to the stop. 9:35 for 3:45. $2,000 is the maximum loss. $3,000 is the maximum profit. Okay, cool. If you are trading with one micro, we are talking about 200 and 300 here per account. Okay, cool. Now let's see how is the back test, how much money we are making, right? So we are making, if we take every single trade here, we are making since May 21st, that's since May 21st, right? So yeah, since May 21st, it's a few days, it's like 2 weeks, I guess, right? So in the past 2 weeks, with this signal, with no extra filters, we made almost $8,000. All right. Okay. Now let's take a look deeper and with a little bit more time. Deeper back test. Okay. So since January this year, we made $62,000 with this strategy, right? And that is 2,000 trades. So the past 2,000 trades, we had 46% good trades, 1.2 profit factor. The max drawdown was $7,000, and the average, doesn't matter, 29. Okay. Now I'm trading one micro. So one micro, I would be doing $6,000, and $700 was my maximum drawdown. I have in a $25,000 account, I have the maximum drawdown 1,500, right? So here, my trading drawdown maximum was $700, and I make $6,000. Now I'm trading 20 accounts. I would be making actually $120,000 here this year with this strategy, which is pretty good. Okay, guys, cool. But what I have to say is, before, let me ask you, sounds good for you? This strategy sounds good for you? Or sounds average, or sounds meh? Because I'm telling you, I can't find anything better. And I have every single indicator. I have every single system. I have everything. And I never saw anything producing results like that with consistency, right? Now, you guys tell me what you think about that. Good, bad, average, any feedback? Good.
Eric, I think it's good.
Good. All right. Okay. So I also understand that is good. And I feel like in my case, I will be trading. Let me go back here. In my case, I will be trading 20 accounts. with micro, one micro. In my case, I would be making $120,000 total. And here we are talking about 6 months, right? So for me, in my case, that would be average $20,000 a month, right? With 20 accounts on Apex, trading one micro contract per account, right? Okay. Now, before we go, we keep moving, on NQ, this is the as deep as I can go, 2,000 trades. But if we move here to NDX, then we have to fix the numbers here. That would be 1,600. That would be 1,600 because the ticks is different on NDX. Here, 800. And here, instead of 1, should be 20, right? I guess that's it. That's it. That's it. $2,000, $3,000. Okay. Now let's try to backtest this thing on NDX as far as we can. Okay, so if we go on NDX and we backtest this thing for 16,000 trades, it's gonna be $1 million, 51%, 1.4, only $8,000 drawn down, right? So on a long term, this thing works fine. This thing works really, really fine on a long term. All right, guys. Okay. So I'm showing you that this strategy that we are going to stop filtering. What we are doing that's not good, it's we are trying to avoid the risk. So we are filtering too much. So this strategy that we are going to stop filtering, that's the result of this strategy. Let me reload the way it was. But the only thing is, you guys will have to deal with some stops, right? Now, here is the thing. Here is the most important thing. We have here 300 trades since the May 21st. Okay. Now, listen. First trade, okay. Second trade, trade number 4, you start losing money. And then you lost, stop, almost came back, stop. And then you lose money for 60 trades. That probably would be 2 days or 3 days. That's going to be the day that you're going to go out there and say, hey, you know what? Quantico Cap is a shit. Eric is a scammer. This thing is not good. It doesn't work. I'm only losing money. I'm lost my Apex accounts. I hate this guy, blah, 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 blah. Because you can't hold the strategy for a long time. But if you hold it, then 10 trades later, you would be here. And 40 trades later, you would be here. Right? And then you're going to have some plateaus. And then you're going to move forward. And then you're going to have some plateaus. You're going to give back some money. And then you're going to keep moving. And then you're going to give back some money. And then you're going to keep moving. So the thing is, guys, understand that in this period of time, you're going to have some plateaus. You're going to have some bad days. You're going to have some good days. Now, the worst for you here, probably when you gave back a lot of money, it was trading with one micro, $340, $350, let's say. Your max drawdown was $350. You are allowed to have a drawdown of 1,500, right? And your max drawdown was 350. So you are good to go. Keep going with your Apex account, right? And here we have almost 1 month. Let's talk about micro, okay? You have almost 1 month trading, not even 1 month, and you are already making $1,000, almost $10,000 with a mini. That would be $1,000 with a micro, okay? So if you traded before, you know that sometimes you're just gonna lose, 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 lose. You're gonna break, you're gonna quit, not anything's gonna work with you, right? But if you follow a system that we have the back test, we have the numbers, we have a reason to trade the system, that's gonna be the result. Now you're gonna feel like, Eric, man, I don't like it because I don't want to lose money. And I'm telling you, so trading is not for you because we can't make money every single trade that we take, right? We can make money in a long term. And this is not long term. This is 15 days. This is pretty much like short term, right? We can make money, but in the end of the day, guys, you're going to have to deal with some stops. And I just going to let this thing roll this way. And if you can't deal with stops, I am sorry. Um, if you find other place that you can trade without stops, let me know. I can go too. But the best we can do here is we're gonna make money, but we will have to deal with some stops. So I'm saying that to tell you guys that we are trying to avoid these trades. We are trying to avoid this guy. We are trying to avoid all this drawn down here. We are trying to avoid all this drawn down. But avoiding those guys right here, we are also avoiding these big spikes right here. So we're not going to avoid anything else. The strategy is here. We took a lot of time, a lot of money to create this guy. So we're just going to release the strategy the way it is. And Monday, you're going to start seeing the aggressive signals like that. Now, it's up to you. You might be seeing, for example, this sell right here, this sell signal right here. And you're going to see that puts and calls is like a crazy. We have a lot of calls. Why would you sell? You don't sell. It's up to you. All right. For example, this one, the moment that we had this sell, we were having, what time is it? It is today at 101. 101. Today, 101. Let's see. Today, 101. There you go. We were with 70% calls. Why would you take a sell signal right here with 70% calls, right? So we're gonna let you guys see all the signals, and it's up to you if you are going to take the signals or not. Make sense? If you wanna take the signal, go for it. Take the signal. Worst case scenario, you're going to take a stop here, just like this. It's not a big deal. Best case scenario, you're going to make money just like this. This one, let's see here, it was 155. Let's take a look on 155. 155. 55 here. We were with 69, but we had this huge drop here, right? So it's up to you. You are going to take the trade or not. But probably I wouldn't, but I would miss this big trade here. Now let's take a look at the result if we were trading today, only today with this guy, so we can have an idea. It's 6. And today is the 7. All right. So only today, with this guy right here, we would be making $2,500, 17 trades, 64 good trades, 2.4, maximum drawn down 600. That would be with a micro $60, and average trade 146. Now, lost money, make it back, lost money, and make back, lost money, make it back, and lost money. Then there you go. This is how it's going to work. All right. So this is going to be the aggressive, guys. So, guys, you have the back test for today. You have the back test for the week. Let's put here. Back test for the week. We have some bad moments on the week, but we are recovering. All right. And you have the back test for forever, since the beginning of the year. Oh, that's just for the past few days. Okay. Now you know how that works, right? So we're gonna stop filtering. We're gonna release the the aggressive like it should be, you guys will have all the signals on your screen, and then it's up to you if you are going to take the signal or not. One thing that you can know is if you take all the signals, in the end of the day, you are still profitable. If you try to avoid a few signals when like the puts and calls are not on your favor, you might be avoiding some stops, right? But you also might be avoiding a big trade like this. Up to you how you're going to be trading. We're going to do our job, which is give you guys all the information, all the signals to take the trade on your discretion, and knowing that even if you take some stops and if you take all the trades, in the end of the day, you're going to be making money. All right. Okay. Before we continue, any other questions here, guys, so far about the aggressive? Oh, and the moderate, the trading stop will be different. We're gonna have the moderate with the trading stop instead of when it moves 20 brings 10. When it moves 20 is gonna bring to the break even. So we're gonna have more conditions to stay on the trade a little bit longer. So moderate will be pretty much the same thing that we have on aggressive, but the trading stop will be a little bit far. So we're gonna have better conditions to make like better trades. That's it. Questions about aggressive, extreme, anything? You guys got it? Okay, since we have a few people here, then I have a question for you. Do you, do you, I can try to see here the backtest for moderate. Do you think it's better if um, we work like this, we try to avoid you guys, we are trying to avoid the risk and holding back the signal. But now we understood that's not good. We're going to just release the signal and you guys decided when you are going to trade or not. If you don't know anything about trade, you can follow all the signals. It's okay. If you learn a little bit with our platform, you're going to be able to filter yourselves some signals. That's what we are doing. Tell me about it. What do you think about that? And Big W, yes, man. I'm going to show you the back test for moderate. The back test for moderate pretty much. Let me share my screen with you guys. Trading view stopped working. Let me reload. Let me reload. Okay, let me share with you my screen. So you're gonna be able to see the difference. Do you have the vector formula? Maybe it's worth to create two separate sections. One of the filter. No, we're not gonna create. We're not gonna work with the filter anymore. That's final. All right. We are trying to filter and eliminate risk, and it's not being good. So I can see that's not being good. Look, today we made a lot of money here, but we just did not trade because our filters didn't allow us to take any trade here. So, and I can see that for the whole week. I saw that for the whole week. So we're not gonna put the filters anymore. We're gonna give the guys signals, because I know that if you are just following the signals, you're gonna be making money. You're gonna be making money. You're gonna be profitable, and you have a lot of information on your dashboard. If you want to filter, you can filter with the information that you have. If you don't want to filter, you just want to follow the signals, go for it, right? Now, the difference between aggressive and moderate is on the trading stop. So on the moderate, we're going to bring the trading stop to 0, right? So instead of 90,000, we would be with 11,000, a little bit better here, right? And deeper back test, let's see, 56 instead of, I guess it was 60 something, 56 here on moderate. And if that was aggressive, That was aggressive. That would be 65, right? So in a short term, we would have a better result with moderate. In a long term, we are having better results with aggressive, right? And guys, I tried everything, every single filter, every single strat, everything. That's the best I could find. That's the best we could refine the system today, and this is what we're gonna do. Starting Monday, you guys will have the extreme, which is the momentum indicator, and you will have multiple signals. That's why we're gonna call extreme. We're gonna give you everything that we have, and then you're gonna have aggressive, which you also gonna have a lot of signals. If you follow the signals, you're gonna make money. And if you want to filter the signals yourselves by the information that you have on your dashboard, puts and calls and targets, line in the sand and everything, up to you. You guys will be able to filter with the things that you learn. If you don't want to filter anything, if you want to just follow the signals, you're going to be making money. You're going to have some stops, but you're going to be making money. All right? Okay. Now, before we go to how to approve the account in one day, any questions about that?
Yes, hi, Eric. I have a question. Can
I'm
you hear me?
sorry?
I have a question. I don't know. Can you hear me?
Yeah, go ahead, man.
Okay. Do you have the backtest for the extreme?
No, no, we can have backtest for extreme because the filter is a proprietary indicator that we cannot replicate in any other platform. We have the backtest for the extreme for this week, since we started putting the filter, right? So that's the best we can do for extreme.
Okay, so the recommendation is to follow all the signals in the aggressive.
My recommendation for you guys, to be honest, is follow the signals on aggressive, right? If you have a sell signal and man, you have 70% calls, don't take it, right? If you have a buy signal right there close to the VOAP, wait a little bit. Wait to see if we're going to break the VOAP, right? If we are going from above, you have a sell signal right there close to the VOAP, wait a little bit to see if we're going to break the VWAP. If you are on Nasdaq, you are far from the VWAP, you have a sell signal, but on ES, you are there on the VWAP, wait a little bit to see if we're going to break the VWAP on ES. So you guys know that VWAP and POC are levels that we might have some bounce. You guys know that the puts and calls is a new indicator that we developed here on Quantico Cap, but it's working like a charm. Puts and calls works fine in this calculation that we did. So you're going to have buy and sell signals. Take a look on the puts and calls, take a look at the level, and take your decision. I probably would take every single signal, right? I probably will filter myself if I have a lot puts and calls against me. If I have a sell signal with 70% calls, I'm not going to sell. I might be losing a trade, like missing a trade. But for me, it's in dotted, I'm not going to trade, you see? But some people are going to take the risk and they might be doing good trades. Again, we're going to put the signals there. You guys have the right to see all the signals because you are not blind. I'm giving you all the signals and I'm giving you all the information about the market makers and everything. You know where is the biggest bar of the day. You know where is the line in the sand. You know where is the target. You know the puts. You know the calls. You know the implied volatility. You know where VIX is going, yields is going. So you have a lot of information to actually know beforehand if you are going to take the signal or not. All right? Okay, so it's going to be up to you.
Yes, I also have a question now related to the aggressive. So you are saying that previously the filter was enabled and upcoming Monday the filter will be disabled on aggressive. Is it not an idea that you introduce that we can choose? Do we want the filtered version or the unfiltered version?
that's the thing, because if we are here on our side filtering the signals, and in a day like today, I just gave no signals for you. Like you have 0 signals today because our filter is not working, right? So if you don't filter the signals, you're gonna be profitable. That's the idea. Like the signals itself, it has a filter, right? The indicator, the indicator that we are using on the aggressive, it has a trigger, it has a filter, it has a system, it is already there, and it's already working, already making money. But like any other indicator, you have a few stops. We put some filters in place, extra filters, to try to avoid the stops. And what we are seeing is we are avoiding the stops, but we are also avoiding the good trades, right?
Yeah, 100%.
So
I
yeah, man, like
100% follow, but that's why I was wondering, maybe it's an option to offer both. Um, for instance, let me give you a better example. I'm a software developer, and I'm not all the time watching the graphs, the charts. I'm doing multitasking. So the aggressive with the filters on, it's awesome for me because it will not send much signals. But if it sends one, I can almost blindly trust and rely on it. If I have to check
yeah.
myself, then it's more work,
But
more effort.
listen, if it was working like that, I would keep it. Like, okay, we're not gonna have 10 signals a day. We're just gonna have one, and this one's gonna be good. I would keep. But some days we are filtering, filtering, filtering. When we check the signal, boom, big stop. So we
Yes,
cannot guarantee that we're gonna avoid the stops putting the extra filter. And that's what we were doing. We thought, okay, it's okay if we have just 1 or 2 signals a day, if they are good signals. Nobody cares if it is 10 or 20. Like we want to
exactly.
make money, right? But the extra filter, it doesn't guarantee that we're not going to have stops, and we are having stops anyway.
Of
So
course.
the, we are taking this decision because we balanced. Like, what if I'm working with the filter, and what if I'm working without the filter? Without the filter, even if you take some stops, you are making a lot of money. And with the filter, you are kind of like a very, very, very slow, almost not moving. You see? So
Yeah,
that's why
clear.
we decided, okay, let's remove the filter. But again, I can tell you what are the filters that we are using, and then you guys can decide to use yourselves, and actually is better. So you're gonna have the signals there. Just follow the signals, because the idea is, can I follow blindly the signals? Yes, you can. You still can follow blindly. The only thing is, prepare your mindset to take a few stops. You also gonna have amazing trades. You're also gonna have trades that's gonna give you 50 points, right? But prepare your mindset to have a few stops. That's the only thing. That's the only reason that we are doing all this live, and I'm talking to you guys, everything. And like, people here know me for a long time, since build their own and everything, that everybody knows that I am very honest and very transparent all the time. So I could be just like start giving signals and whatever, just follow the signals. But I make sure that everybody knows that we are doing. You're going to start receiving more signals because we're going to remove our extra filters. You're going to have more stops, but you're also going to have way more good trades. You're going to have good days, you're going to have bad days. In the end of the month, you're going to be making money, right? And I don't know, maybe we're going to have a bad week, or maybe we're going to have a bad month, but in a long term, this thing works. This thing is going to produce you guys good results, right? Now, taking a look on the signal, for example, today we had amazing signals, but all the signals that stopped, pretty much it was the sell signals. Now, uh, I can see here that, for example, I have 2 sell signals on the VO app with puts and calls over the 70. So how can you sell on the VO app with 70% calls? So that's something that you're going to be able to see there and say, you know what, I'm not going to take this trade. This is too risky for me. You just don't take it. But again, I'm going to give you the opportunity to choose. Now, I'm not removing the opportunity to choose when I'm taking off the filters. Actually, it's the opposite. I'm going to show you all the signals that we have. If you follow all the signals, you're gonna be making money. And when I give you all the signals and I also give you all the information, you have the opportunity to choose if you are going to take the signal or not. Pretty much, my friend, if you take a look on puts and calls and the level, you're going to be able to filter most of the bad signals. All right? Okay? All right. Any other questions about extreme and aggressive? And guys, listen, the difference is I'm not selling you guys a course. I never sold you guys a course. Everything that I tell you guys and all the mentorship and everything, like we are doing that because we are all on the same boat. I'm only selling Quantico Cap because it is a business. But in the end of the day, I'm making money with my own accounts. I have the Apex account, I have my Tradovate account, and I have my Forexc account. I'm making money trading myself. And believe me, this system, this is something that I am relying to trade my own money. So I want to have this system working like perfectly because it is my money on the game as well. I have skin on the game, right? So every time that I'm changing something, every time that I'm improving something, every time that I bring in something new, it's because I also want to make my money, more money, trading myself with my system, all right? So again, in a day like today, I would be buying every single signal that we had. Probably I would have like one stop today, but I would be making a lot of money today. All right, guys. Okay. And I'm going to give you guys the chance to see the same thing that I'm seeing here. Okay. All right. Any other questions before we go?
Eric,
Yeah, I've got a question here.
Yes. Lance, tell me. Lance.
Well, it's not really a question, it's a statement also. The templates, you got basic, advanced, and intermediate. Now, if you're going to disable the filters, we can really just use the basic because that's just outputting all the signals. So we don't need to be using the advanced or the intermediate. We can just use the basic, take all the signals as you said.
No, exactly the opposite. You're going to have a lot of signals there. So I
Yeah.
would use the intermediate, right? And because on the intermediate, you're going to be, let me share my screen with you. I'm going to show you exactly what you should be watching. On the intermediate, you're going to have the signals here, right? One thing that you have to keep your eyes open is the puts and calls.
Yeah.
Right? You have to keep your eyes open on the bars. If you have a target or if you are in the line in a sand, for example, if you have a buy signal here, line in a sand is not good because you are already on the last bar of the day, right? So keep your eyes open here to make sure that you are not trading the line in the sand. Keep your eyes here to see that you have more puts and calls according to the signal, right? And this is extra information telling you guys what's happening with the day. So for example, the day it's going up all the way, but yields is holding. So you know that's not going to be a very, very strong movement up because yields is holding. So I would always keep my eyes open always on what's happening on VIX, yields, where are we on the bars and puts and calls. And then when I have a signal here, boom, buy. Let me take a quick look here. 70%, 65%. I still have bars above. This guy's pointing up. This guy's pointing down. This guy's pointing down. Man, I'm gonna buy. Sell. Okay, sell. I still have bars below. I still have bars below. I have more puts. I have more puts. This guy's pointing up. This guy's pointing up. I'm gonna sell, right? So I would keep the intermediate because the intermediate has the information that you need. All right. Okay.
Okay. Thank
All
you.
right. I guess Dimitrios has a question as well. Go ahead, Dimitrios.
yeah, Eric, hello. I agree the whole changes from my side. Only that I have is when you make the live session on the trading, I saw that I have a delay, 1-2 seconds when the system give us a buy or a sell. So sometimes I am too late in, or sometimes it's good, sometimes it's bad. if it's now persons on Europe.
The problem is because of the distance, right?
Yeah.
We are already working to install a CDN in Europe.
Yeah.
We already have the whole system is the United States. We already have a CDN in Brazil, and we did a test to see that works, and it works fine. In Brazil, we are good to go, like no delays. And we are already working to put a CDN on Europe. So you're not gonna have like this lag anymore.
Okay.
All right.
That's the only one.
Yeah, man. 1 second makes all the difference. So yeah, we're gonna put the CDN there because 1 second makes, like, people think that doesn't make much difference. 1 second makes all the difference. And we're
2
gonna
seconds,
work.
sometimes 2 seconds, because I hear your signal, and then 1, 2 is by me.
Yeah. No, 2 seconds is too much. 1 second is something that we would be working to fix. 1 second, like 2 seconds
Sometimes on Nasdaq it's 10 points, 10 points too late, and when you are on break even, I can't take my break even there.
Yeah, I understand. That's true. Yeah, we are working on that.
So on SP is not so so extreme, but on Nasdaq it's 1, 2 seconds is a lot.
Yeah, that's correct. SP doesn't make that much difference, but on Nasdaq it's totally unacceptable.
Only that I want to say it's the levels and all that stuff. Today I have I take a sell signal on SP on the line in the sand. That's very good on my live live account, but a little more extreme. I have 5 accounts, and for little slow, and 1 account little more risky, and it's good for me today. 150. Yeah.
One thing, guys, that makes me very, very comfortable in doing what I'm doing here is if you take a look on this dashboard, like I'm telling you, because guys, I have every single tool, every single indicator, I have every single of everything here to trade. And I'm telling you, like nothing out there is going to give the important information that you have here. So you know how is the volatility on the market showing, you know, VIX and yields. You can get this anywhere, but okay, it's organized here. But you have the VIX, you have the yields, but you have the numbers on each section, which is a very good thing. Now you have the volatility, you have the momentum, you have the puts and calls proprietary that nobody have this thing. And you also have what the market makers are watching, and where the market makers are going with the price. So you can still trade with the market makers strategy, but you can use this thing for momentum, this thing and this thing for momentum, right? And now you're going to have multiple signals here, and you're going to have all the signals here. Like, man, you have everything you need to make money. I am very confident that if you guys follow these signals here, and with time you understand that's not a big deal. You only have to understand those bars and the puts and calls. That's the first thing you have to understand. What does it mean and what the put and call means. And keep your eyes open here. You have to understand that this is the hedge of SP 500. So VIX is 100% connected to SP 500. If VIX is going down, SP is going to go up. If VIX is going up, SP is going to go down. And here is the interest rates. It's what will move the market, but it's not a hedge, right? So if you guys understand the VIX and understand the yields, and I already made a live explaining, it's there on your dashboard on the tutorials or the live trading rooms. The past one explaining everything about this thing, right? So you guys understand yields, VIX, you guys understand the bars right here, that you know that the price will always try to reach the biggest bar of the day. The price should never break the line in the sand, which is the last bar with liquidity on both sides. And you guys understand the puts and calls, it's going to give you the extra information to decide if you are going to take all the signals or not. So, man, I am very comfortable in doing this because I know you guys will have everything you need to take a good decisions and check the signal or not. If you are in it, just check the signal. Worst case scenario, I stop. It's not the end of the world. It just check the signal. All right. Okay, now let me talk to you guys about the trade that we do to approve accounts in one day, evaluation accounts in one day. Is there anyone here that never heard about this before, or everybody already participated in a training and you guys already know what I'm talking about in approve the account in one day? If there is anyone here that doesn't know how to do it, raise your hands so I can see. Okay, so a few people doesn't know yet how to approve accounts in one day. All right, so first of all, Apex, they have some rules for evaluation accounts and PA accounts, right? On PA accounts, you have very strict rules that you have to obey. In the end of the day, we are not here to trick Apex. We are here and we are glad that Apex exists. Those guys are funding trades. Those guys are helping trades to start trading, making money, blah, blah, blah. I love the company. I love the mission. We would never, never, never do something that goes against the Apex rules, right? So it's important to understand we never do something that goes against the Apex rules. But for evaluation accounts, they don't have this kind of rules. So you can trade, you can hedge, and you can trade in news, you can do whatever you want on evaluation accounts. If one day they decided that they are not going to allow this strategy on evaluation accounts anymore, I'm going to tell you guys, hey, it's not allowed anymore. We can't do this anymore. Just stop it because we are not here to take advantage. We are here to make money with Apex. That's the idea, right? We are not here to take money from Apex. We are here to qualify as a good trader and make money for Apex. I don't want to take his money. I want to take money for the I want to make money for the company. I want to be a good trader that he puts me on the market and he makes money with me. So I'm never going to be a problem for those guys. All right. But we have to understand that since Apex distributes a lot of money, they have a lot of frauds. They have a lot of people trying to take advantage. And that's why they have so many rules and they are correct in every single rule. So if you are using Apex, I advise you to go to their website and take a look in all the rules. All right. So on PA accounts, forget it. We're never going to be able to do what I'm going to show you guys to do now. Evaluation accounts, you can do it because you don't have those kind of rules. Right. Now, what is the thing? The thing is, you have on the $25,000 account, and it's only going to work on the $25,000 account, right? Your goal to approve an account is to make 1,500 without losing 1,500, right? That's the goal. That's what you have to do to approve this account, okay? So what we're going to do, in the end of the day, what we're going to do is, if you want to approve 10 accounts, you're going to buy 20. So you're going to burn 10 accounts in order to approve 10 accounts. So in a special day where you're going to have news and you know the market is going to move a lot for one side, you're going to get 10 accounts buying long and 10 accounts short selling, right? I'm just going to show you step by step how to do that because it's not so simple. But in theory, this is what you're going to do. You know that when you have news, the market's going to move a lot and it's going to move fast. So you don't know what side the market is going to go, up or down. So what you're going to do is you're going to get half of your accounts going up, half of your accounts going down. If on this news, the market's going to go up, you're going to approve 10 accounts up. If in this news, the market's going to go down, you're going to approve 10 accounts going down. But when you approve 10 accounts going down, you're going to burn 10 accounts going up. All right? Makes sense? Half of your accounts is going to go up. Half of your accounts is going to go down. You have to do this in a day that you have news. All right? And you have to make sure that you are doing correctly so you don't mess it up and you don't lose all your accounts. 95% of the times is going to work. Sometimes it's not going to work because the news is not going to move the market like it was supposed to do. But most of the times it's going to work, and you're going to be able to approve a lot of accounts in just one day. All right. Then you're going to say, Eric, but in order to approve 10, I'm going to lose 10. So I'm going to be losing money. Yes, you're going to be losing money, but you're going to gain like time. Sometimes you're going to take 2, 3, 4, 5 weeks to approve an account. For me, it's more important to approve these accounts fast than like keep going, especially that Apex is running some promos. It's very cheap to buy accounts right now. So I would go for that, right? And you can only do that to approve your accounts. Once those accounts are approved, you buy the PA accounts, and then you are trading right. Never do this anymore because it's forbidden for PA accounts. Okay? All right. So I'm going to show you guys how you do that. So this is how you are going to do. Let me share my screen with you guys. And in this case, I'm going to share the whole thing. Okay. Now you guys can see my whole, you guys can see this screen where I'm moving the mouse. Yeah. Okay. So here I have the web, and here I have the app. Okay. So you're gonna need to have the tradovate on your app, and you're also gonna have to tradovate on web. Okay, that's my web version, and that's my um, uh, uh, app version. This is downloaded on my computer, and this is web. Okay, cool. Now to make simpler, I just gonna delete those guys right here because we don't need that. We only gonna use any queue, right? We only gonna use any queue. Any queue is what you need. Any queue and any queue. Let me just put any queue right here. Any queue and any queue. Okay, right. So you have both on any queue. First thing, put both on any queue. Now you're gonna have your accounts, right? So I have 20 accounts here. On my case, I have 20 PA accounts, right? But you are going to have, let's say, you're gonna approve 10, so you're gonna need 20. You're gonna have 20 Apex accounts. It's not PA, Apex account. So what you're gonna do is you're gonna click here. You're gonna go all the way down, right? And then you're gonna manage groups. So I have one group here. I just gonna delete this group. So I don't have any groups, right? So manage groups. Let me do it again. Manage groups. Boom. And then you're gonna create 2 groups. One group we're gonna call buy. Boom. Right? And then I'm gonna bring 10 accounts to this group. So 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. And it's very important that you understand that the first account of this group is the number 33, ends with 33. All right? So save the group. Let's save it. Okay. So on this side, I'm going to select the account 33, and I also going to select the group buy. Right? So make sure you have here one account of this group and then the group. Okay. So I have the first account of group buy and the buy. And then I'm going to go to this guy right here, to the other one. So I just gonna do the same thing. Let me open this one, delete this one right here, delete. Okay. And then I'm gonna go, just like nothing's happening, I'm gonna go to manage groups, and I'm gonna create the group cell. Okay. And then I'm gonna bring other accounts. The last account I have on this group is the 42, if I'm not wrong. 42 is the last account on this group, right? So on this group, I'm going to start with 43. So 43, 44, 45, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. All right, now I have 10 accounts for this group as well, the sell group. And the first account is the number 043. So what I'm gonna do here is I'm gonna choose 043, this one, as the account, the main account. And then once I have the 43 here, I'm gonna select the sell group. There you go. So it's important to understand that you have the first account of group buy and group buy selected, the first account of group sell and group sell selected. All right. So you are prepared to sell here and buy here. Okay. Okay. Now, what do you need? What you need is to do something that you are going to make $1,500 very, very fast. Very fast. Okay, you need to make this money with one simple movement. Oof. Okay, so what I'm gonna do here is I have 10 accounts here and 10 accounts here. I can go, the maximum that I can go is 4 mini contracts, right? So 4 mini contracts for each account, I should be using 40 contracts here and 40 contracts here. Boom. All right. You guys got it? So, man, I'm going to be making $80 per point here. $80 per point in each account. And I'm going to be making $80 per point here in each account. It's super fast. Okay. Now, let's see. Let's do a quick math here. 1,500 divided by 80, it's 18 points. Man, that's gonna take like one second for you to make 18 points in a day that you have news, right? So you are prepared. Okay, now let's say we are having news right now. Right now, I just gonna press the button sell here and press the button buy here and wait. One side is going to give me my money as the other one's going to break. I'm going to be making 1,500 in one side and I'm going to be losing 1,500 in another side, right? Now, if you want to make sure, let me just put like 1 because I don't want to take the risk to do anything wrong here. 1, okay. So if you want to make sure that you're going to exit with money, what you can do, that's what I did the last time. You're going to click here on this line, dragging tools, click here, get a line, click on line, and create a line with that is going to give you like 22 points, 23 points. So you click on here, press shift, and then drag a line. So you're going to be seeing how many points you are doing. You see here 16, 17, 18, 19, 20, 20, 25. For me is good. 25. Drag a line with 25 points here, and also drag a line with 25 points here. It's just like a click, drag, and press shift. You're going to be making how many points you are doing. Okay? Select the line, drawing tools, select the line, click, start moving the mouse. And then when you press shift, you will see how many points has this line. In this case, 26, right? So just drag a 25 points line here and a 25 points line here, all right? You're gonna do this 1 minute before the news. So let's say I just sold here, boom. What I'm gonna do is I'm gonna drag the line, I just sold. I'm gonna drag the line here, 25 points, and I'm gonna put my exit here. I just gonna click and select buy. So I'm gonna put my exit here. So I know I don't put a stop. I just put take profit here. All right. Again, I have this line and I'm waiting 1 minute before the news. Okay. Now 1 minute before the news is right now. So first thing I'm gonna sell. Boom. I'm gonna sell. I'm gonna drag the line where I sold. I have 25 points. I'm going to click on the end of the line and put a buy, put an order to buy. It's not going to give me because I need 10, right? So I'm going to buy here. On the other, once you do that, go to the other side, click on buy, boom, buy, bring the line where you bought it, and click to sell right here. You guys got it or not? The best thing is to draw this line before 25 points in 25 points, draw this line, right? You have 1 minute to do that. Sell, boom, you sold. Drag the line, this is it. Put the exit order to buy back here. Come here and boom, buy. Drag the line where you bought it and put the exit, boom, right here to sell it back. And get out of the computer. Get out, go get a coffee. When you come back 1 minute later, you're going to have 10 accounts approved and 10 accounts broke. Okay? Right? So let me delete all this thing. Guys, every time that you do something here to show something, to whatever it is, just delete it right away. So you don't take the risk to do anything wrong because you mess it up your configurations, right? So I just gonna delete this one as well. You don't play with that, man, because if you get distracted, you're gonna be doing bad stuff, wrong things. Okay, so I don't have any groups anymore. I just gonna close and close, all right? And that's it. So you guys got it? Wait. Web version in one side, desktop version app in another side. Create one group to buy, create one group to sell. Select the first account of the group buy and the group buy. Select the first account of group sell and the group sell. Wait, put already like 40, if like do times 4. If you are going to approve 5 accounts, you do 20. Right? Times 4. You need 4 contracts per account. You want to approve 4 mini contracts per account. If you are going to approve 10, you need 40. Put 40 here, 40 there, right? Wait, drag the line, 25 points here, 25 points here, and wait. 1 minute before the news, you sell here, bring the line and put the exit below the line. You buy here, drag the line and put the exit above the line. You only put take profit. You don't put stop loss. You don't need stop loss, only take profit. And get out. Come back later to get your money. Not to get your money, but to get your account approved, right? That's it. That's how it works. Everybody who is doing it's getting approved. Everybody who is doing is getting approved. Now listen, one more time. We are not here to take advantage of Apex. As it right now, it is allowed. They allow us to do that to approve accounts. It is allowed, right? So we're going to keep doing as it is allowed. On PA, forget it. You can't do that on PA accounts because it's forbidden. You can't trade news. You can't go short in one side, long in another side. You can't do all this thing on PA accounts because here is real money and they need traders. They don't need strategy. They need trades. On evaluation accounts, it's okay. So you can do on evaluation accounts. All right, guys? Okay? All right. If you want to approve 20 accounts, you can do it. You can buy 40 accounts evaluation. You can buy as many evaluation accounts as you want it. So you can buy 40 accounts, put 20 here, 20 here, enter with 80 mini contracts here, 80 mini contracts here, and go for it. In one day, you're going to have 20 accounts approved and your life is going to change. But if it is the first day you are doing that, I recommend you do with 2 and 2, 5 and 5. Don't go too big on the first one. Make sure you understood how it is done. All right? Okay? That's it. I don't feel comfortable leaving this thing recorded because I don't know, maybe they can change their rules tomorrow on Apex. But if they can change their rules tomorrow, if they change anything, I'm gonna remove the video and that's it. So right now it's gonna be there. Okay. Any questions about that? You guys got it?
Eric,
Yeah.
why we must have the app version on one side and the web version on the other side? Why we
Because
cannot use the web version on two windows?
you're
That's
not gonna
problem.
have, if you can have two separate windows, probably you can, but that's, you gotta have two separate things, because you have to select one account with this group and another account with this group, right?
Yeah,
If you are
yeah.
trying to do on the same with two charts, it's not gonna work. So you gotta have two windows, or preferably two different
Yeah.
whole things, right?
So I use the two windows at this time from one account, little risky live account, and 5 accounts, little conservative.
So it's working. Go for it.
The problem is when the tradovate it's reload, then I put the same in the two windows, the same account.
Account. Yeah, that's not gonna work.
We must
Choose
see.
different accounts in both windows. Yeah.
Yeah.
Okay. All
Okay.
right. Okay.
Because it's a little bit confused with the app version.
Yeah.
I can't configure this thing.
Okay. The tricky is to choose one account of group to buy and another account of group to sell. You gotta have different accounts here, otherwise it's not gonna work. You're gonna lose money, right?
Yeah, I understand.
First account of buying group, first account of selling group. Select buy group, select sell group is gonna work. Okay.
Yeah.
Any other questions? Before we go,
thank you.
let me tell you when it's gonna be good to do that. So what we can do, I'm gonna show you guys how it's a good thing to wait. Let me share my screen. Let me share this screen right here. Well, okay.
I have a quick question while you're doing that. Can you do this with 50K accounts and trade micros instead of minis?
No, because the problem is not that. The problem is 50K, you have to make $3,000 without losing 2,500. You don't have the same proportion, you see? There is a risk for you to lose those 2,500. You're gonna break those accounts without approving the other accounts. And then if you break those accounts and the price starts coming back, you're gonna break those both sides, you see? So you gotta do that in account that you have the same amount to get approved and to get to break the account. You got it? It has to be the same. Okay. On the 50,000, if you want it, you can do it and you can go all the way to 2,500. When you break those accounts, you stop the other ones. Right? And then you are already 2,500 closer to your goal. But it's too risky. I would do with the 25. All right? Okay, now the best thing to do that, you go to economic calendar, and then you get like the days that you have three stars, like this. The news that you have 3 stars. For example, unemployment rate, that's it comes on the same day that you have the payroll right here, payroll. So you're gonna click here on payrolls, right? And then economic calendar is gonna give you, come on, all the past days that you have the payrolls. So for example, you have all the dates here. The last one was May 3, April 5, March 8. And then what you can do at 8:30, you can go to TradingView, for example, right? And you can start looking for May 3. Let's see, May 3. May 24. May 1 to May 3. There you go. Let's take a look. How was the payroll here at 8:30? 8:30. That's the candle. Get the ruler from here to here. 107, 100 and 200 points in just one news. That would approve like any account in the world. Even the $50,000 that would approve. It would break those accounts, but it would approve anything. Got it? Because it's 200 points. So you know that's just one day. Let's check another one. Let's check the other day. That was April 5. Then you're gonna go there to April 5. April 5. April 5. There you go. April 5. 8:30. That was it. April 5. Let's see. From here to here. 100 and let's make it bigger. Okay. Now from here to here, 100 points. So looks like payroll moves a lot in the market. So every time that you have payroll, you can do this trade. All right. Now, Eric, but we already had payroll today. So what's going to be the next one? Next one, let's see, for example, tomorrow. Let's see. No, tomorrow we have nothing. Next week, because today's Friday. Next week, 10 years notes. No, that's auctions. Not going to make it. Core CPI, right? So it's 8:30. Let's see the past few days. That's the next one you guys gonna have. I guess it's Tuesday, right? Core CPI. The last one was June 12. So same thing. Just go there to June 12. May. June.
Esse mês ainda, é semana que vem.
Wait, yeah, fuck. Yeah. That's the next week. That has to be May 3. May 3. No, this is still payroll. It's May 15. May 15. Let's see, May 15. May 15. May 15 should be this one. May 15. Well, we can see, yeah. Don't even have to rule. May 15, 8:30. How many points? Boom, boom, 130 points. So you guys go there and do this in the other dates, all the other dates. Try to do May 15, April 10, March 12, February 13, January 11. Just do this year to see if in the average we move more than 50 points. If in average we move more than 50 points in just one candle, go for it. Okay? Right? So I show you guys how to do it step by step, and I show you guys how to figure it out which news is good for you to do that. You will see that you have news with 3 stars that in average is going to move only 35 points. It's not good enough. Find something that in average always moves more than 50 because you need 25 points to get this thing approved. Right? And I want you guys to get this thing approved as fast as you can because, man, I need you guys to start trading money as fast as you can. All right? You're going to do that in one day. And once you do that in one day, then you're going to come back trading with us with the aggressive signal. Now, guys, please forgive me about the word I'm going to use it. But the lack of English is not helping me much to find the right word. So I'm not calling you stupid. I'm just saying, don't be stupid. Don't get your PA account and start trading with one mini contract because you are going to break this account for sure. I can guarantee. And people do that because they only think in how much money they're going to make if everything works. The sizing of your trade, you have to find in how much money you can afford to lose in one day, right? So think about the cost of doing business. I have the video there. The last meeting that we had, we talk about the cost of doing business, right? give yourself chance to be wrong 100 points. Give yourself chance to be wrong 100 points per day. So if you are wrong 100 points per day, you're just going to lose $200. Guess what? You are not even close to break your account. All right. And if you are right 100 points, you're going to make $100, $200 in that day. It's not going to happen. What's going to happen is if you follow the aggressive signal, you're going to make 25, 50, 60, 25, 30, 50, 100, amazing day, 150. You're going to keep making money. It's low, it's low, it's low, it's low, it's low. Terrible day, we're going to lose $200, 100 points. But that's not going to hurt the whole picture, right? So you're going to lose, you're going to win, you're going to lose, you're going to win. Terrible day, you're going to end the day with $200 loss. Because the back testing, we stop when we lose $200, like 100 points. On the back test is 2,000 because it's mini, right? But we're going to stop giving you guys signals when we lose 100 points. That's it. That's the end of the day. You should not be trading anymore. But I want to trade yourself. We are not going to give you signals because it's against the risk management of the system. So you can be wrong 100 points a day and you are not breaking your account. But you are going to be right 25 points, 30 points, 50 points, 60 points, 100 points, and then you're going to be wrong 50 points in that day. You're going to call the day with 50 points because the day is going to be over. You're going to be wrong at 25, but you're going to be right again 50. You're going to be going just like the market's going, right? Now, the market is the exactly representation of your account. Let me show you how this is possible. Okay, boom. Here we go. Today, let's go today. Let's go today. There you go. Now, take a look on this part of the day right here. The market's going up, right? Do you agree with me with that the market's going up? Just this, what you can see here. The market's going up, right? So that's going to be your account. You're going to go up, you're going to lose some money, you're going to go up even more, you're going to lose money, you're going to stay in a plateau, and then you're going to go up. You are very happy, you're going to buy a Ferrari, and then you're going to go down. You think everything's lost, and then you're going to go up again, going to go down, and you're going to go up all the way down, up. This is how it's going to be your account. This is the market. It works like that. It's impossible to just go up. Like nobody can do that. Not even the best traders in the world, right? It's all about risk management. It's all about trading with one micro. It's all about understanding that if you have a $50,000 account, Otley, if you have a $50,000 account, you don't have $50,000. You have 2,500. That's the only money you can lose. That's the only money you have. So if you only have $2,500, man, you can't trade with more than 2 micros. 2 micros is the right size for you to trade because you don't have 50, you have 2,500, right? Okay, you have to have a good management to not break your account. You're going to be making little money, but forever you're going to be making little money. Sometimes you see people on Quantico Cap sharing like, oh, I made $500 per account. I made $1,000 per account. I made $600 per account. Forget it. Keep your eyes on your own account because these people break accounts like every single week. They are always breaking accounts. It's hard to find someone making more than $500 a day per account, like constant. All right. So it's better to make 100, 150, 100, 150, 50, 70, 80, but every single day. And then you're going to think, Eric, but man, come on, you're kidding. I can't live making $50 a day. That's all right. But what if you can make $50 a day times 20 accounts? And that's the secret. You don't leverage the number of contracts. You leverage the number of accounts. Make sense to you guys? Make sense? Because then you can make the money you need, keeping your risk management very, very low. If you have 20 accounts of $25,000, you are trading $500,000. You are trading 2 mini with $500,000. That's amazing risk control. You have to go back 700 points to break this account without making any money. That's not going to happen. Even on the back test, we never went back 700 points without making money. We have some plateaus, we have some bad days, we have some bad weeks, but we never went back 700 points because the system works, right? So if you really want to make a lot of money, you're going to trade one mini contract, you're going to break your account. And that's how everybody thinks. They think about how much money they want to make. And you have to think how much money you can afford to lose without breaking your account. And that's why I'm telling you, if you are trading 25,000, trade 1 micro. If you are trading 50,000, trade 2 micros. If you are trading 100,000, trade 3 or 4 micros. Goes like this, right? You need more money, buy more accounts. Don't leverage your contracts. Okay, guys, make sense? Ole, if you are saying something, you are muted. I don't understand. I didn't. No, you didn't say anything. All right. Anyone want to say or ask anything? Because we are done. Anyone want to say or ask anything? Lance, I know you are new here. You have any questions? Let me know, my friend. No?
All good, my end, Eric. Thank you.
Okay.
Okay. Anyone else?
I have one quick question. If you have time to go back, I'm just really struggling with understanding those gamma bars and how they move and what I'm looking at. That's my biggest thing I understand all the other indicators. I just can't wrap my head around those.
Okay, we can do this right now. Og Bonoya, welcome back, my friend. Glad to see you here again. So I want to share my screen with you guys. Where is it? There you go. Boom, boom, boom. Close everything because I don't want to mess it up. Okay. Now, here we have the gamma bars, right? What is the gamma bars? Is where the institutional have their positions, right? Now, before we go, let's to understand what is actually the positions. We have 2 markets. We have the futures. 3, we have the spot market for people who are just buying stocks on the right price. They are investors. They're going to buy and forget it. We have the futures where we are trading right now, like you buy, you sell, you sell, you buy, like a day trading futures. And we have options market. Have you ever heard about options trading before? Ole? All right. No?
I just learned about all of this about a month and a half ago. And so that's why I got into a coaching program, and that program got me towards your system. And so
Nice.
I've been learning I learned for about 3 weeks, and I've only been trading for 2.
Awesome. Great. Options trade. What is options trade? It is something like you're going to buy the options to have the right to actually buy that stock, right? So for example, you have this hat right here, right there. Let's say your hat costs $100. That's the cost of your hat, okay? And I don't know if it's going to be a sunny day tomorrow. So I can tell you, my friend, I want to buy the option of buying your hat for $100 tomorrow. Because you know what? If it is sunny tomorrow and you want to sell your hat to me, you're going to charge me $200 because I need the hat and we have a lot of sun. So the price is going to increase. So what I'm going to tell you is, hey, I can give you $10 today. And if I decided to buy your hat tomorrow, you have to sell me for 100. Now, if I don't want to buy, you can keep the 10. Do we have a deal? And then you say, okay, we have a deal. That's options. So I just gonna give you $10 today. And tomorrow, if I have a sunny day, I'm gonna say, hey man, here is the $90 I owe you, give me the hat. And you're gonna say, hey, but you know what? Now the hat worth more, but we have an agreement. You have to sell me for 100. So I'm gonna buy your hat for 100 and I'm gonna sell for someone else for 150. You got it? So this is options trade. Okay, cool. Now the bars that we have here is the position on the institutional, which is the biggest guys, on options trade. How are the positions on options trade, right? But these positions is going to expire today. So now that you understand that what is options, I can go back here and I'm going to show you. Now, we have, for example, a lot of people, a lot of institutional, they have premium on 5,350. And by the way, this is not the position. That's not the position, it's the premium. We know how much premium we have if we reach this bar today. And we know how much premium we have if we reach this bar today. And we know that we only gonna have like very good premium up to this bar. Like nobody cares if the market's gonna reach this bar because like there is no interest on those bars. There is no premium. Now understand something, everybody. If we have this bar growing during the day, you know what that means? That means that the premium and the interest on this level for today is increasing. So if we reach that price today, everybody's going to make a lot of money. If we don't reach that price today, nobody cares because the expiration is over and like this contract doesn't worth anything else. All right. So this bars is telling you. So for example, we started the day, I don't know if you were there before, Otley, but we started the day on 5,336. That's how we opened the day. And we had this big bar on 5,350. We had a big bar. And I told you guys, 5,350 is a target. We're going to go there because we have a lot of premium. We have a huge bar and makes sense to the market makers, to the whole market, to push the market to this price because everybody's going to make a lot of money. So we're going to go there. That's it. If we are not going, it's because the market is doing something that's not the market structure. That's not normal. So that's when we're going to get concerned. And that's when we're going to say, hey, the market's like divergent. Something's happening that we are not understanding. But the market should go to the biggest bar of the day, right? Now, we reach this bar. And then I told you guys, if we break this level, we might be going all the way to the 70. And I remember that today I told you guys that we should be going all the way to the 65. We still had liquidity on 70, but I remember telling you guys that we should be going all the way to the 65, right? And then the bars starts increasing. And as you guys can see here, the last bar with interest was 75. 75 was the last bar with interest, right? And what happened on the day? We went to the 50, we broke the 50, and we went all the way to the 75. We touched the 75, which we call line in the sand, because it's the last bar we have premium, and we went all the way back. Easy. So when you look to these bars, you know that the biggest interest of the day is around 350. But you have a lot of calls. Like we were going crazy with calls. Like the whole day was like this, call all the time, right? And then we know that when we broke this bar with a lot of calls, man, we're gonna go to the line in the sand. And boom, we went all the way to the line in the sand. What is the line in the sand? Is the last bar with interest in both sides, puts and calls. Is the last bar. We touched the line in the sand, and what happened? We came back to the bar with the biggest interest of the day. We came back to the bar with the biggest interest of the day, right? So these bars right here, it's a map for you to see where we have interest during in that day. And this interest is only good for today, and it's only good for up to 2:33. After 2:30 and 3 p.m., it doesn't work anything else. Like it doesn't work anymore. Like we only gonna consider these bars up to 2:33 p.m. Right? Okay, it's a map for you to understand where we have more interest and where we should have a bounce as far as the price can go. Sometimes we're gonna say, hey, we're gonna break the line in the sand. So for example, let's say 75. Here, you see this red zone right here is the area that we already told you guys. If we touch this area, start selling because this is the line in the sand. Sometimes it's not going to work. Sometimes we're going to break this, break. We're going to break the line in the sand and we're going to keep going up. And why is that? Because even though we don't have a premium anymore, everybody is just buying. And the market maker cannot hold this thing here. So the market maker is going to accelerate the market. So every time that you are buying, the market maker is selling. But when we have everybody buying, the market maker also has to buy. Otherwise, he's going to lose a lot of money. So this is the structure of the market. The market maker has to hold the market here, right? If the market maker is not able to hold the market here because we have amazing news or the day is very good, the market maker will wait to break this level. If we break this level, the market maker will accelerate. So we're going to go even more to the upside. Or same thing to the downside. So the line in the sand for you, you have to understand that it's a level that we're going to touch and come back. If we break the line in the sand, probably the market maker is going to accelerate the market, and that's going to be those days that we're going to go to the sky or to the hell. Got it? Okay. But it's pretty much a map of what's going to happen on the market, where we have interest. It's nothing with the charts and patterns, nothing. Like nobody cares about that. Fibonacci, all the shit, nobody cares. It's about where we have interest, where the market maker and the institutional have to shake the market in order to make money. For example, let's say we started the day in 5,336. We started the day on 36. We had huge premium on 50, but on options, it's not proportional how many points this is gonna walk and how many dollars you're gonna make. If you get to your target faster, you're gonna make more money on options, right? If you get to the target in the end of the day, close to the expiration, you're not gonna make money at all. So you have to reach that point faster to make money. The banks are going to think, okay, I have a huge premium there. If I start buying, and in order to push the price to this price, to this level, I'm gonna make $10 million. But in order to take the price to this level, I'm gonna waste $2 million. It's all right, because I wasted $2 million to take price here. And once the price reaches this level, I'm going to make $10 million. It's an $8 million profit. So that's why when you see those big levels with big premium, we know we're going to reach, because they're going to do everything they can to push the price to that level, because the premium is huge. And as fast as we get, bigger the premium. All right? Okay. Any other questions? You guys want to know anything else?
Eric,
All good? Yeah.
the same question about gamma exposure, but the other one with the QQQ, the target on that, where can we find that one? Because it's not on the S&P. So,
On QQQ,
so where is that?
on QQQ, you will have to open a chart on TradingView to follow QQQ, triple Q. We don't have it here. We have triple Q here, but we don't have second by second. So it's better to open a chart on whatever you want, like a TradingView, and follow triple Q, the price on triple Q there. All right?
All right. Oh, thanks.
All right. Guys, but by the way, listen. Always keep your eyes on SPX when we are talking about the levels. Triple Q is only going to be an extra confirmation because we trade in Nasdaq, but the one that really respect, the one that really gives us information is SPX about the levels, the support, the resistance, and everything. All right. Okay.
So just to qualify that, I'm looking at SPX and I'm expecting NQ to move with it. And so I just have to see where I'm at on the map on SPX and then relate it to NQ and follow the map.
Exactly. So for example, if we are going very close to the line in the sand, you know that we should not break the line in the sand. And you have a buy signal on NDX, you don't buy because you know that we are very close to the line in the sand on SPX. The price should reject the level. All right. Now, we have the biggest bar on 350 on SPX, right? We are below this bar. We know that SPX is calling on 350 and you have a buy signal on Nasdaq. Man, go for it because it is a buy signal on Nasdaq. There is a reason to have a buy signal. And we have the bars calling the price. The last line of confirmation is the puts and calls because the puts and calls is going to tell you about the momentum. So, okay, I have this big bar here. I know we should be going there. But if the puts and calls is not giving you the momentum, we're going to go, but not now. So you might take a stop before going. All right. So we have this big bar. We have the buy signal and we have a lot of calls. Let's buy. Got it? Okay, cool. Anyone else? Any other questions? Anything?
Yes, Eric. Sorry, I have a last question about the signals from Monday. In the extreme, we will have probably several signals at a time, right? But in the aggressive, we will have only one at a time.
Yes, perfect. That's it. Okay. Now listen, if it is too hard for you guys to read the whole thing, follow the signals. If you are in doubt, don't check the signal. Now, please, I know my English is not good. I know you guys have to give an extra effort to understand, but you do your best on your side. I will do the best on my side, and we have to go to the live trading room every day. Because every day I will be talking about the indicators. I will be reading the whole thing with you guys, right? And then, man, I'm telling you, 15 days later, you're going to be able to read the whole thing yourself because it's pretty much, that's it. So you're going to have like 15 days with different scenarios. You're going to have a day that everything is on the same way. We have a day with divergency. We have a day with a lot of extra confirmation. We're going to have a tough day. We're going to have days with news. We're going to have days with funks. We have a lot of different scenarios. You go with me at least 2 weeks, at least, right? After 2 weeks, you're going to be able to follow the signals and read the indicators in a way that's going to give you all the confidence you need to make money. So for example, how come today we didn't have any signal on aggressive, but we had people making money? Because they are trading with their own readings on the system. All right, okay. Noé is asking me about the bot. Guys, listen, the bot is ready. We are just waiting approval from Google to release this bot, all right? Because we have to install this bot on your Google Chrome. The bot will be installed on your Google Chrome. So we already submitted. We are waiting for Google to give us an approval so we can release the bot to you guys. So it's ready. We are just waiting for the approval. We are not going to charge for the bot. The bot's going to be free for you guys to use it. Not free. It's going to be included on your monthly membership. You're going to have 2 bots to choose. One 100% automated is going to check the trade, check the exits, check the break even, check the stops. It's going to do the whole thing for you. You can only use it with your own money. And one semi-automated is just going to check the trade. It's going to be up to you to stop, break even, or take profit. You will have to manage your position. That's going to be the one allowed on prop firms. All right? Okay. Prop firms, they don't allow 100% automated bot. You can have a trader assistant that's going to help you take the trade. But once you are on the trade, you have to manage the trade yourselves. All right. And the bot will be working with the aggressive. So you're going to have a lot of signals, a lot of trades. It's going to be good for you guys. Okay, people? All good? All good. Now, important is I show you guys the back tests on aggressive. You're going to make money following the aggressive, but you will have a few stops. Like you got to learn to live with that. Stop is the price of doing business. You're never going to be a good trader if you can't afford to take a stop. If you can't afford to take 5 stops, it's because you are trading too big. Trade smaller, trade with 1 mini contract, 2 mini contracts, size up in a way that you can afford to trade with 6 full stops. All right? Okay? And you're never going to break your account. And that's what's important, breaking accounts, right? You're never going to break your account if you trade with 1 micro and you can afford 700 points stop. Like it's going to be 6 days where everything goes wrong. 7 days. No. Yeah, 7 days where everything's going to go wrong. All right? It's not going to happen. You just follow the signals. Size up 1 micro, 2 micros, depending the size of your account, and go for it. And by the way, if you are trading $25,000, you trade 1 micro, but it doesn't have to be like this forever. You can make 26,500, 26,600. The trading drawdown is going to stop there. It's not going to come after you after 26,600. And then you can start making a little bit more money. When you make a little bit more money, you can make your stop $3,000. Right? Because you have a cushion. Then you can start trading with 2 micros. And then you can start making more money and withdrawing this money because you have a cushion there. It's up to you how you're going to manage. But don't try to trade it too big because you are going to break. It's impossible to clean all the stops. All right?
I think that's what led to my question earlier this morning when I'm keeping really short stops because I'm trading in queue. So I'm assuming I'm trading 1 micro,
mini.
Not a mini. Is NQ a mini? I'm on NQ.
Oh, no. NQ is mini. NQ is mini.
Right.
$20 per point.
Right. So that's why I was a little more concerned about the stop losses. So I should probably not be trading in Q. I should be trading that. Was it M in Q or
M and Q? That's right. M and Q. Micro. Right? You can trade like 2 of those contracts, but micro. All right? Okay. 20 points on Nasdaq, guys. We only gonna use 20 points because in the end of the day, we are trading momentum. The idea is to get the trading going because 20 points on Nasdaq is nothing. Like you're gonna take a lot of stops because of the 20 points, right? Because it's a very, very short stop. But we can't also trade with a bigger stop because the trading drawn down on prop firms. So 20 is the right size for us. Right? Okay. All right, guys. So that's it. That's it. We keep talking, and I'm gonna upload this meeting on your dashboard if you wanna watch again, especially if you are going to do the thing with the news. All right, watch again to make sure you are doing right. And I see you guys Monday. I'm back to United States. Everything is good. I have my big screen again. I see you guys Monday. Take care, everybody. Bye-bye.